On today's episode, we are going to take a look at FSLY. This stock is up almost 20% for the day, and after hours is up almost another 1%. So on this episode, I'm going to see, is this stock too late to buy now? So today's episode is going to be broken down into the following. First, we're going to take a look at some of the recent news that are driving this stock price up. I'm also going to do a very small introduction of FSLY for those that are not too familiar with the company. Next, I'm going to take a look at some fundamental information on FSLY and explain what I like about the company and what I don't like at the moment. And obviously, at the end, I'm going to end with my thoughts. Like always, if you're new to my channel, if you're a long-term investor, if you like to learn about growth stocks, make sure to hit that subscribe button. Like always, if you want to get in contact with me, YouTube comments, Twitter, Twitch, live streaming, you can find me on my Discord channel for free or at josenaharo.com. But remember, everything I say here is just my opinions. I am by no means a professional, so it should not be taken as advice. Now that we got that out the way, let's get started with today's episode. Like I mentioned, today we are going to take a look at FSLY, ticker FSLY. Remember to hit the subscribe button and the thumbs up. It helps the small channel out so much. And let me know in the comments right now, guys. Are you buying FSLY? Are you selling? Are you holding long term? Let me know what are your thoughts on FSLY. It's great to share with the community. Also, if you want to know when I buy stocks, make sure to join that Discord channel. It's free for anybody that wants to join. I post every time I buy any long-term investments. Like I said, it's free and you should find it on the pinned comment and on the description. So FSLY right now is sitting at $120. And if we take a look year to date, this stock has been amazing to investors, giving almost 459% in the past year to date. In the past month, it was kind of sitting for a bit, but in the past month, it has returned almost 50%. And in the past 5 days, it has given about 27.2% to investors. So congratulations to all you that are holding long right now. Market cap for FSLY is still only $12.7 billion. And that to me is crazy right now. I do believe this is one that in the future can still be a multi-bagger for me, sitting at $12.6 billion. I believe there's still much growth for this to go, and I'm going to explain on today's episode why I feel like that. But at the same time, there are some risks that come with owning FSLY, and I'm also going to mention that. So today, let's kind of start off with what is the main reason the stock is up today. And today, they did announce that Google Cloud and FSLY are teaming up are teaming up right now. And anytime you have a big boy like Google team up with a small company like FSLY, that to me, that is great news all around. Earlier this month, if you guys didn't know, FSLY did partner with Google on some other aspects on their marketplace. But now with them partnering with Google Cloud, which is the whole enterprise now, that is a whole big deal. So what is this partnership going to do with how is Google and FSLY going to work together? First, let me probably start off by doing a quick explanation of what FSLY does. So FSLY pretty much is what's in the name. And the easiest way one can say it is it makes the internet faster. So you may be like, Jose, how does it make the internet faster? That, like I said, it's the simplest way, but FSLY's Edge Cloud platform, it can accelerate applications and speed content delivery. And this is very important because, for example, here they make this research that 53% of people will leave a mobile page if it takes longer than 3 seconds to load. So right now, we want things right away. So FSLY pretty much helps that happen, and it helps that happen in a secure way. And this type of thing is dealt in multiple services. They have customers, for example, in the online retail. They work with like Shopify, Ticketmaster, Etsy. In the online video, they work with like Vimeo, Fubo TV. Then they have like in the SaaS companies, they work with like GitHub, Stripe, Shopify again. In the digital publishing, they work with like New York Times, BuzzFeed, and many more. So it's pretty much to help make sure those applications are running fast and they're running secure, right? Because if you're running a big business, the last thing you want to know is you want to run the core of that business. You don't want to make sure you're doing everything in optimized. You're not optimizing the speed. That should be the job of somebody else. And that somebody else is FSLY. So now Google Cloud is seeing the performance from it and are teaming up with them. The second news, and this is one that's pretty old, but it still has come after their earnings, so I think it's important to mention. Fastly completes an acquisition of Signal Science, and the acquisition finished October 1st. You might be like, Jose, how much did they pay for it? That's a great question to ask. And what do they do? Because when a company acquires another company, they have to make sure they integrate pretty well for it to be a smart acquisition. No point in making an acquisition on a company that's hitting a completely whole different market, especially for a company like Fastly, which is growing right now. So this original acquisition took place in August 27th. That's when the big news came out for this purchase. But it did not finish, the transaction did not finished until about a week ago. So this transaction was about $775 million. Out of that $775 million, $200 million were paid in cash. $575 million were paid in stock. And this is right now, I think it's a great thing that a lot of these growth companies are doing that have seen such a huge increase in valuations that they're using their stocks as monetary value because they believe it's a great tool to use. We've seen it in Nvidia. Nvidia just used it to pay to buy off one of their acquisitions for ARM, which is still happening, but they're using mostly stock for that acquisition. So what does Fastly, so how does this integration work? Like I mentioned, Fastly also wants to make sure that your application is not only running fast, but it's running secure. This company that they bought, which was Signal Science, is another security application. So Signal Science technology will be integrated into Fastly's upcoming Secure at Edge offering, which offers a modern, unified web application and API protection solutions that will power and protect companies looking to further or begin their digital transformation. So check that, yes, this is good because it matches what the company is going with. It's a great acquisition, in my opinion. All right, now I want to mention two things that have really driven this stock price to be a very volatile company. We can see Fastly right now is hugely volatile, increasing almost 20%, and we can see on August it dropped almost 34%, and then from another few weeks is up another 27%. So this is a true volatile stock. One of the major reasons right now is that this whole TikTok and US and Chinese tensions is kind of dragging Fastly along with it. For the first half of this fiscal year, TikTok made a huge portion of this company's revenue. Almost 12% of total revenue came from this single user. Because of that, it has been very volatile to this news. Has it been overextended? I believe to some point, yes, it has been overextended. Still something I want to mention. Other thing is this company right now, if we take a look at forward price to sales ratio, is trading at 26.73 for December 2021. That is a bit high. And now let me actually talk about what are the things that I like about Fastly, and I'm going to come back to this valuation, and what are some of the things I don't like. So first, the big major things that I like about Fastly is their future growth. Analysts are expecting Fastly to grow about 30.5% annually for the next 3 years on average, and that anything growing over 20% annually is a very, very strong growth company. So we can see the growth for this company is still here, and analysts are still expecting. And with news and partnerships like they're doing with Google right now and other big companies, that's going to drive these revenue forecasts to go even higher. The second reason I like them is historical revenue growth, right? It's good to see that future revenue growth, but historically, this is a company that last quarter grew 61%. The quarter before that grew 38%. The quarter before that grew 44%. The one before that 35%. The one before that 34%. We can see in the past 6 quarters, in the past 6 quarters, it's grown over 30% its revenue each year. This most recent quarter grew 61%. And finally, the main other thing that I like about Fastly is, and this is what it's weird, I'm gonna mention this in both the things that I like and don't like, is this valuation. Right now, a forward price to sales ratio of 26.73 might seem pretty expensive. But if this is truly a growth company and we're still seeing new partnerships with new big companies, this forward price to sales ratio and this revenue estimates can be a lot. The revenue estimates can be a lot higher in the upcoming years, and this forward price to sales ratio can be a lot lower. So and right now sitting at a $12.66 billion valuation, I do believe this can still be a multi-bagger. But now let's take a look at the things I don't like. Let's stay with that valuation. If they don't see any new partnerships, which yes could happen, this forward price to sales ratio, and if they don't see any more partnerships with any big companies, this forward price to sales ratio can be really high compared to other companies. So this is more of which side are you betting? Are you betting that they're going to see way more partnerships in the upcoming years to push that revenue estimates up, and in theory dropping down that forward price to sales ratio? Or are you in the side that, hey, they're kind of reaching their peak, they're not going to make any more partnerships, and this forward price to sales ratio is way too expensive? Another thing I don't like about FSLY, what I mentioned, is their volatility. Super volatile. We can see with prices being stretched up like 20% today and almost 1% after hours. I wouldn't be surprised if we saw in the upcoming days, we might see a form of a pullback. Again, this is not guaranteed, but I do believe this will be a very volatile stock. Who knows? And that's the thing about timing the market. Who knows? This might be, for all anyone knows, this might be the lowest it will ever be. Again, there are chances that another drop might happen, but who knows when that drop will happen, and who knows how much that drop would be. So valuation is definitely something I don't, valuation, depending if I believe they don't have any more room to grow, is something I don't like. Another thing I don't like are their margins. Right now, if we take a look at trailing 12 months on GAAP earnings, this company is not profitable, even though they are improving. And remember, this is trailing 12 months margins. Right now, for this most recent quarter, was negative 21.4% profit margins. So they're still way behind from being profitable. And if we take a look, analysts don't expect this company to be profitable anytime soon. So that's another thing I don't like. The final thing that I don't like about FSLY is their cash flow from their cash flow operations. Right now, their operating cash flow is negative 12.84% on their trailing 12 months. And normally, when you see revenue going up, you should expect net cash flow from operations to go up. Net cash flow from operations is the money you get from your everyday activities. So it's bad to see that. Actually, it's kind of actually inversing. As revenue's going up, the net cash flow from operations is going down. So that's another thing I don't like. But because this company is burning cash, I wanted to make sure that this company had plenty of money right now. And cash equivalents and current investments, this company has about $450 million. Out of that $450 million, it only has about $25 million of debt, maybe even $30 million of debt. So even after paying the $250 million for the acquisition, and let's say it wants to pay off all its total debt, this company will still have about 200 and something million dollars left over. And this company is burning about $31 million a year. So in theory, this company can survive for a long time. So even though cash flow from operations is burning cash right now, the balance sheet is looking really well, in my opinion. And another thing, this net cash flow from operations is including stock-based compensation. So if we remove that, the money the actual cash they're burning right now might be even lower than that. But personally, I like to take a look at GAAP earnings, not non-GAAP. So now my thoughts on FSLY. So right now, FSLY, I personally am to the side that they're not finished growing yet. They're still gonna continue to grow bigger partnerships. And this partnership with Google is really big news. I believe it's even worth more than this 20% jump. So Mark, right now I own FSLY. At the moment, I am not intending to sell. Am I intending to buy right now? I don't think so. I wouldn't mind buying a little bit, but I'm not going to be rushing in right now to double my position size. That's not what I'm going to do. I'm going to continue the dollar cost average. Based on this news, I think I might look at it in the upcoming weeks to increase my position size from here. But right now, I personally wouldn't go and jump in and double my positions. That's not something I would do. If I wanted to enter, it would be small positions and dollar cost average from there. Like I mentioned, the market cap from here sitting at $12.66 billion. Due to the nature of the market, due to the partnerships we're seeing, I believe this market cap is still pretty low, and we can see a lot higher. And when I'm talking a lot higher, I'm thinking about 2, 3, 4, 5 years from now. I'm not talking about the short term of things. In the short term of things, this is a company that I believe will be very volatile. And like we had a 20% day, it's not impossible for us to have a negative 20% day either. So like always, I hope you guys enjoyed today's episode. Make sure you subscribe. Make sure to hit the thumbs up. Take care, guys. Have a good night and see you next time.